Hope you guys' morning has gone pretty well. Mine has been up pretty early because little man, like I've told you guys before, my wife's a nurse, so she's worked last night, and so when the days that she works, she has to sleep during the day because she works at night. She's working tonight too, so she's sleeping, and I just put little man to sleep. But our morning was pretty fun. We had, like, if you checked out the other videos, you kind of know what our breakfast looked like. At our breakfast, because she's working, I try to do as much as I can around the house to try to make life a little bit easier because she's a NICU nurse, so that job seems a lot tougher than some of the household chores, so I try to do my part, and even my little guy tries to help out too. Recently, he's been learning how to open the doors and jump off the couch, so I know that you can do as much as you can, but I'm definitely not going to be able to move our couch or take off the doors off the hinges. So pray for me that this child doesn't break an arm in the next few days. But yeah, we had breakfast and then we did some laundry and was able to fold a load. He loves to try to help, and his way of helping is taking the clothes out and just letting them go. So I let him do that until I get to the end. So I kind of leave a couple of clothes in there because he'll just take them in, pull them out, take them in, pull them out. But if he feels that he's helping, then even better. But yeah, after hanging out with him for a little bit this morning, I just put him to bed. And I thought, okay, well, like I told you guys before, I'm trying this new schedule. So I figured before I get to the gym, let me try to make part of this video, head over to the gym, upload part of it. Then during his next nap, I will upload the next part and then do edits and hopefully have this out to you guys by at least hopefully around 7-8 o'clock tonight, so you guys have some cool information to look forward to for the week. Okay, so for this week, some of the things I want to bring to your attention will be earnings. Right off the jump, we have Desktop Metal reporting this week. That will be one that I'll be focused in. Disclaimer, I do hold a position in Desktop Metal. I'm a big fan of the company. Be looking at Campbell's, Tilly's, and Ulta. And I know these kind of sound like, kind of all over the place, but what I'll be looking at is basically just kind of get a sense of how people are spending in our economy, and more importantly, like, I guess basically what some of these companies foresee in their upcoming future in regard to growth and some roadblocks that they may be hitting due to either inflation concerns or supply chain issues. Okay, another thing I'm going to be bringing to you guys' attention today is, where is it? Oh, yeah. Our book. Already read the first chapter. Got some cool things that I want to show you that I found pretty amazing, that even with this book from 1949 is still applicable today. Some of the main concerns are about those who think that the market is taboo, that think that we're in a bubble, and that think that inflation is a problem that can't be overcome. So those are some of the tidbits that I'll take. I'll show you some specifics with that. I know we talked about Dollar Tree last week, and I did let you guys know that Costco reported. But one thing that I didn't mention, just because I try to make these videos a little bit short and sweet, there was something I found in the earnings reports from Costco that I'd love to bring to your attention. I also found some cool data on what's happening right now in the market regarding just the main sectors, what sectors are actually profitable and what sectors are up and what sectors are down. So I want to show you guys some of that. Piggybacking off the Desktop Metal earnings, I also want to remind you guys that NNDM still hasn't reported yet, so keep that in the future if any of you guys are shareholders in NNDM, Nano Dimensions. Love to see kind of where they're at and how the pandemic had affected them, or like kind of post-pandemic era has affected them, and where do they see their company going. Remember, they're trading well below their cash value. I think about 500 to 600 million below, so you're in the money if you buy some shares today. Again, not financial advice, but just something to keep in mind. What I've noticed a lot of YouTubers are doing right now, especially with the Ukraine situation, is that we have just like a lot of YouTubers prophesizing, and just kind of letting you know what's going to happen, and just be ready. And it's one or the other. Be ready for the recession, or be ready for World War III, or this is what they're doing, and because of this data, this is exactly what's going to happen. I'm a huge data analysis person. It's part of my profession. It's part of what I got my master's in. But in regard to data, I think it's how we interpret our data and use it as a benchmark. Oh, Oopsie girl. I think it's important for us to. Okay, so like I said, I'm back now. I was supposed to record the video during my son's second nap, but he had different plans. He felt that he didn't want to take a second nap, so he finally went to bed. He usually goes to bed around 8 o'clock, 7:45, and today he wanted to go to sleep around 8:30, and that's after only one nap. So just one of those days, he knew that I had a schedule, and he's like, you know what? Not today, buddy. Nope. Not today. But anyway, so let's just kind of touch on some of the things that I wanted to discuss. As I had said earlier, I want to discuss some of my findings on Costco. Yahoo reports that the last 3 membership fee hikes came in 2006, 2011, and 2017, anywhere from 5 to 6 years apart. Costco has 2 membership levels. Gold Star costs $60 per year, and the Executive is $120 per year, and offers more reward features and additional discounts. It was reported that Costco's membership renewal rate for the United States and Canada was 92%. It's been boosted by members choosing an auto renewal option. Costco said its second quarter sales were up 14.4% and net income was up $1.3 billion compared to $951 million for the same period in 2021. Amazon announced last month it too was increasing its Prime membership for the second time in 4 years. The rate for annual subscribers will go from $119 to $139 starting March 25th. And this announcement came at the same time Amazon reported that its fourth quarter profits had nearly doubled from the previous year. Try to keep this in mind as you start seeing some of your favorite big companies increase. And why are they increasing their prices? Are they increasing just because? Are they increasing because they're looking to expand? Are they increasing due to inflation? These are all just things that I think it's fair to keep in mind. But ultimately, when you see something like this for Costco, as I said yesterday, it's always advantageous, in my opinion, to invest in a company that is going to continue to grow, show profit, and have great guidance. And it seems like Costco is doing all that. So again, touched on this last week. I just kind of want to wrap that up and let you know why I thought it was important to just kind of look at Costco over time. I'm going to be bringing in big retail as a sector that we will follow and just kind of see how the market and more importantly, how we as consumers are accepting these price hikes and if they have any correlation with the stock price. All right. So hopefully that brings you a little insight on how Costco did, what they're doing in the future, and why you shouldn't be surprised, as it seems to be a trend of something they do every 5 to 6 years. Okay, so piggybacking off on how our economy is doing, now this has really nothing to do with stocks, but this jumped out to me, so I just wanted to read this to you. Batman has his fair share of pressures, from saving Gotham to saving movie theaters. And while they're both still decidedly works in progress, The Batman, starring Robert Pattinson, managed to give a little glimmer of hope to both, grossing $128.5 million in North America, according to studio estimates Sunday. The latest relaunch of the 80-year-old comic book character is well above Warner Brothers' conservative estimates into the weekend, which had the film pegged for a debut in the $90 million range. It's the best opening of 2022 and the second best of the pandemic, though it's more than $100 million shy of Spider-Man No Way Home, that hit a still unbelievable $260 million opening weekend in December. Keep this in mind too. Internationally, The Batman earned $120 million, bringing its global total to $248.5 million. Warner Brothers halted its release in Russia following the country's invasion of Ukraine, saying that the company would monitor the situation as it evolves, as many major studios made similar decisions with their films. Okay, so what does Batman have to do with anything? Well, to me, this was important because as we not only pay attention to our favorite stocks, favorite sectors, and earnings and, the finances, we also, like I always say, just go outside and look around and see how people are spending. Are your stores filled up? Are your gas stations full? Gas is going to go up high, so just be prepared for that. Are people still at the mall? Are people at restaurants? And ultimately, are people doing things like going to the theaters? And, with the conservative estimate of $90 million for that to be blown by, to me, it just shows us that our economy is still moving. And even with everything going on overseas, it's still nice to see that our economy, that we are still spending and willing to spend. And so again, these are just things to keep in mind. It's not going to be indicative of how the market's going to go this week. You know, the market's probably going to be red all this week. I mean, there might be a few green days, but again, until everything is resolved overseas, everything will be red again. If you looked at the futures, you would see that the market's already down almost about 2% in the Dow, S&P, and NASDAQ. So just be prepared. Again, you don't need to go heavy if you are trying to dollar cost average in. Don't try to plan on predicting the bottom. My only suggestion, again, not financial advice, was just to be aware of your own financial situation and what makes sense for you to hop in. If you see something that is just like, wow, this is unbelievable, then, you know, the opportunity might be presenting itself sooner than you may think, because we've been in a very red market as of late. Okay, so again, you know, Batman, why would you bring that up? Again, it's just some things that I like to think about as I look at the overall picture as an investor. I try not to just stay focused on my favorite stocks and hoping that's only going to go up. I like to pay attention to everything that's going on. So I'm realistic with some of my expectations, not only for my time frame, but the expectations that I put on the return that I have set for some of my portfolio. So hopefully, you know, this just kind of gives you another thing to kind of keep in your arsenal on what to consider when you are investing. And again, just wanted to bring it to your attention. Okay, so brought this book up. Oh my God, it's in my face. Okay, so I brought this book up in the last video, letting you know that I would be going through it. Hopefully, if any of you guys are out there, let me know if you've been reading it too. But I just wanted to read you a couple things that jumped out to me. Let us repeat, therefore, that the genuine investor in common stocks does not need a great equipment of brains and knowledge, but he does need some unusual qualities of character. I think that's huge because, you know, a lot of people think that you need to know, and you do, trust me, technical analysis and understanding how the graphs work and Ichimoto and, you know, how to figure out the floats and how to have a better understanding of cyclical rotations. All that matters. But at the same time, what's inside and how you are built as a character, you know, your character is huge. I think too, you know, I think a lot, I can't remember what the phrase is, so I don't want to butcher it, but I'm pretty sure it was Peter Lynch that said, it's not so much your brain that you need to do well in the market, it's what your stomach can handle. And for me personally, I have had many days where I was like, oh my gosh, I can't even believe this is happening. But as years have gone by, I'm no longer surprised on what comes in the news. I'm no longer surprised on how things move. More importantly, I just try to stay educated. I try to stay aware, and I try to make sure that I make conscientious decisions on how I hop into the plays that I feel have been pushed down more than they need. Again, it's so much you gotta keep in mind, and you have to have a plan on what your long-term outlook is for some of your plays. Is long-term to you 5 years, 10 years, 1 week, 1 month? As you better understand yourself as an investor and what you consider and what type of investor you truly consider yourself, I think having knowledge of this will just help you solidify those decisions. Piggybacking off of how things are being down and turned down and just in, you know, almost below cash value, I want to bring this chart up to you. S&P 500 sectors performance. The only thing that is up right now since the beginning of this year through 3/4/22 at the time of this this chart, the only thing that's up right now is the energy sector. The health sector is down almost 6.2%. Information technology is down 14%. Consumer discretionary down 16.2%. Consumer staples 1.8%. Real estate's down 10.1%. And, you know, I'm not going to go through all of them, but materials are down 8.6%. Another big thing that you want to keep in mind is that the S&P information technology sector and industry performance is also down. And this just kind of breaks it down a little bit better for you in regard to the tech space itself. Semiconductor equipment is down 21%. Communications equipment is down 12.4%. System software is down 13.6%. And semiconductors in general are down 16%, to name a few. So again, the reason I want to show you this chart is for you to kind of take in consideration with everything going on. And if you know that there's only one sector that's outperforming everything else, as an investor, Do you truly believe that the market will just crash and that everything else is just going to fail? And if the answer is yes, then you might want to just sit on the sidelines and try to time the bottom. If the answer is no, and you've done your due diligence and you know that some of your favorite industries are due for a rebound, it might be a good time to try to figure out exactly what plays you want to take advantage of and what positions you may want to increase or start. So again, I hope that some of these charts and this information help you out, because ultimately that's what it's all about. Just trying to give you guys as much information that I feel is missing out there. So another thing that is discussed a lot so far in the first part of the book, the word intelligent in our title will be used throughout the book in its common and dictionary sense as meaning endowed with the capacity for knowledge and understanding. It will not be taken to mean smart or shrewd or gifted with unusual foresight or insight. And I thought that was a pretty big thing that jumped out the page to me, because as I've been saying, right now we seem like a lot of these investors are they're making it seem as they have some unique talent and just incredible foresight that no other person can obtain. And in my opinion, I just don't think that's true. I think if you know how to do your homework and you have the patience and you understand, and you also hop into the market with funds that are acceptable for your pockets, I think you can very well be successful in this market as long as you are patient. My goal here is to try to give you guys as much information as possible that I'm consuming that's helping me out with my positions, and hopefully that it can help you. But again, this book, even though it's hella old, there's a lot of things going on right now. One of the big things that they say that a lot of people get scared about going into the market is because of inflation. And look, 70 years later, we're still dealing with inflation, right? Do any of you guys think realistically, let me know in the comments below, do any of you guys realistically think our economy will be ever running with, inflation below 2%? If the answer is yes, let me know what your time frame is. I would love to hear that. The other answer is, do you think we will ever be in a debtless economy? That's something to think about, because we always talk about, student debt, and there's housing debt, and there's, commercial debt, all this kind of debt, right? And they're always talking about, and it's great for politicians. Politicians love saying how they're just going to decrease people's debts. Look at the debt. The debt's almost like 30 trillion right now. You know what I mean? Do you guys realistically ever think that we as a society will be running debt-free and inflation-free? If the answer is yes, then I strongly advise you to hold off from ever entering the market and just wait for that moment. And then let me know how long you have to wait. If the answer is no, then hopefully this channel helps bring you a little bit of closure onto what are some of the things that are happening not only in our country, but in our global economy. But yeah, speaking about inflation, this was the last thing I wanted to bring to your guys' attention for what is to come for this following week. We have CPI data that will be coming out on Thursday, March 10th. So again, keep this in mind. What many believe to be is another likely hot red inflation reading, and a handful of key corporate earning results are on the tap for investors this week, offering further catalysts after the past several weeks' volatility across risk assets. On the economic data front, Thursday's consumer price index, CPI, from the Bureau of Labor Statistics is set to be the most closely watched print. Investors have been anxiously awaiting signs of a peak in inflation, and to that end, the incoming data is unlikely to offer this payoff. Consensus economists are looking for the headline CPI to accelerate to show a 7.9% year-over-year increase, rising further from January's 7.5% rise, according to Bloomberg consensus data. Such as a result would set a fresh 40-year high rate of inflation. As you can see in this graph here, it's been 40 years since it's been this high. So since the 70s. Anyone remember who the president was in the 70s? That's a nice little question to keep in mind. And even excluding volatile food and energy prices, the CPI is likely to rise 6.4% compared to January's 6.0% increase. The month-over-month data are also expected to keep climbing. Economists are looking for a 0.8% monthly rise in the broadest measure of February CPI, marking 21 consecutive months of advances following January's 0.6% rise. The latest CPI report will begin to capture the only very early impacts to prices from Russia's war in Ukraine. With a full-scale invasion taking place in late February, concerns that this geopolitical conflict would disrupt the energy complex in Ukraine or Russia, the world's third largest oil producer, have sent U.S. crude oil prices soaring above 110 per barrel to a more than decade high. And again, like they said, most investors are waiting for the peak. What are some signs of peak? Well, if you're looking at a data, if you're just looking at a chart, the peak would be the climax, and when we get to the highest point, and when it's going to drop. And do we start seeing that drop? Think of how we saw with the vid cases. Just going up and up and up, and as the vid cases are going up, the media's peak, the media's frenzy around it is sky high. So I feel that we are definitely in the heat of peak attention for the war, for sure. But in regard to inflation peak, unfortunately, I think it's a little hard to tell. Okay, well, that basically rounds up everything that we discussed today. Again, just wanted to kind of bring to you guys' attention why Costco's prices are going to be increased. Want to show you some expectations for CPI data. Wanted to show you kind of how I'm seeing our economy in real time, and that's kind of coinciding with the Batman example I gave you. And also wanted to just kind of remind you guys on how to be aware of who you consume your information from and how you gather some of this data. But like always, thank you so much for hanging out with Stock Talk with Erik Anthony. And again, I'll see you mañana.